Hi everyone, Brett Freeman here from Noel Jones Real Estate. Thank you for tuning into our video. We've also been getting bombarded by a lot of information at the moment, so we wanted to create this video for our clients to maybe cut through some of the white noise and give our insights into what's happening in the economy, some of the recent government initiatives, and also talk a little bit about the property management sector from that side of things. Obviously, I want to clarify we're not here to give financial advice. We have, however, asked two of the best financial minds we have in our group, Jason Cunningham and Craig, to talk you through their insights into what they're seeing is happening in the economy and some of their predictions moving forwards, and also what's available out there for our tenants and landlords. Daniel will then wrap it up with a couple of brief summary, but also talking about some of the new commercial code of conduct changes that have been brought in as well. We understand a lot of you going through really, really tough times. These are unprecedented, challenging times. We hear that, we understand that, we're talking to a lot of you daily, and we really do understand what you're going through. I want you to know from the Noel Jones family, we are here to support you. We hope you're okay, and please reach out if we can do anything to assist through this difficult time. At Noel Jones, we've had to adapt very quickly to the changing landscape and bring in a lot of state-of-the-art new technology, systems, procedures to make our guys really nimble and flexible and give them the best tools possible to give the best possible service to our clients and to make sure they can do their job like they've never done before. Coupling that new technology with our amazing property managers who have just been outstanding through this really, really challenging time, we've been able to get, from the whole group, our vacancy rate has now dropped down to 0.7%, which is unbelievable effort for our guys, considering the average usually around Melbourne sits between that 2 to 2.5%. So well done, guys, amazing effort. Jason Cunningham's going to talk through next. You probably recognise Jason. He's been on lots of TV shows. He's written books about the economy, share market, stock market. Very, very educated and well-versed in these topics. He's been on shows, SEN, and he's very regularly to talk through these things. So I hope I haven't talked you up too much tonight, but love to hear your insights in the economy and where you see things moving forward.
Hey, thanks for having me, Brett. I really appreciate the opportunity to chat with you and a lot of your landlords. Before we start, just want to introduce myself, and this will only go for, 15, 20 minutes. No, I'm not a real estate agent. I'm an accountant by trade. I run an accounting and financial planning business called The Practice in Melbourne and in Sydney. And my role with Noel Jones is the chairman of your board. And Brett has asked me to give some commentary around where we as a business and me personally, where I see us as an economy and small business owners and individuals and how we're battling through this pandemic that is the economic impact, if you like, of the coronavirus. If I could just take you back to 3 or 4 weeks ago, and I've seen this go through 3 different waves, if you like, at the cycle where we're at. It first began 3 or 4 weeks ago when our office was fielding a heap of calls from our clients talking to us about the share market, and that was the leading indicator of where the economy was going to go. And in the first few days, in the first week, the share market got belted day after day. It dropped 12% one day, 10% another day, 7% the next day. It sort of had a little bounce of 4 or 5%, then it got belted again. And all in all, I guess in the month of March, I think the market, the All Ordinaries Index, which is the indicator of the Australian Stock Exchange, it came off 30%. It was pretty challenging and pretty trying times, and our clients were sort of like, me. What's this mean for my managed investments? What does it mean for my shares? What does it mean for my superannuation? But for me personally, I've been there a couple of times before. I witnessed firsthand the dot-com crash in April 2000, if you can remember that, and then the GFC, obviously, in August 2008. I was a bit young for the 87 stock market crash, and I'd started my first job in 93 when we had a mini recession here in Australia. But I was definitely part of the 2000 crash and the 2008 crash. And my first thoughts from somewhat of an objective perspective was, hey, we've been here before and we're going to bounce out of it. The following week came the next wave where we as individuals, as human beings, we sort of lost our marbles in the supermarkets. You know, we were punching on in aisle 4 over tinned tuna and salmon, and baked beans had never been as popular as they are now, and 2-minute noodles were flying off the shelf and nobody could get a roll of toilet paper. And again, we sort of, at mankind, we sort of lost our way, and we thought that we're going to be bunkering down for 12 months and we're never going to eat again. The next wave was when we started to understand that this is where we are. This is the state of play. And mankind, human nature, it sort of we became a bit more adaptable, a bit more nimble, and business owners were helping each other out. Investors, people that lost their jobs, everybody started to feel this notion of this community, and we're all in it together. And so I'm asked often, Jason, what should I do? How do I combat it? Now, I'm not a health professional. I'm an accountant. And well, in actual fact, over the last 3 or 4 weeks, I've become a financial counsellor. And I guess my commentary has been around this. I think there's only 3 things that we can do, and the 3 things that we need to focus on. And they are, what can I do for me? What can the government do for me? And the third one is, what can I do for the community? And in turn, what the community can do for me. And if I could just entertain you for a few minutes and just talk to you about those 3 points. The first one is, what can I do for me? And there's a saying, if it's to be, it's up to me. And really, it's getting an understanding of what I can control, and I can only control the controllables. And as a landlord, we need to be having conversations through our estate agent with our tenants to try and work out what can work for them and what can work for us. We also need to have some conversations around with the biggest expense that we've got, which is our financier, which is our mortgage, which is our home loans, and starting to open the batting up and having conversations. And I know Craig's going to allude to that a little bit later on, but having those conversations with the bank and having those conversations with our mortgage broker to make sure that we can appease the bank's requirements around our home loan repayments, around principal and interest versus interest only, and those sorts of things. And the next thing is then understanding where we are sitting from our income and our expenses. Some of us who are listening today have got a business and try to get an understanding of what of the government stimulus packages are available to me as a business owner, whether it's the JobKeeper payments, whether it's the cash flow boost, whether it's having conversations with the tax office around delaying some of the tax payments I need to pay, whether if we're in business and we've got a commercial landlord, around having conversations with the landlord. But also, more importantly, it's about developing a plan. And when I talk about a plan, I see the plan needs to come out in 2 tranches. The first tranche is this survival mode. And people are saying to me, how long is it going to last, Jason? And to be honest with you, I don't have a crystal ball. No one does. All I can go on is the advice that I'm getting from the government. And every initiative that the government talks about, whether it's the JobKeeper program, whether it's the Job Seeker program, whether it's the trainee and apprentice scheme, they're all talking about a 6-month window. And so when we talk about planning for the survival piece, we talk about 6 months. Then we need to talk about how we thrive post that 6 months and what do we do after that. So that's the first thing. What can I do for me? The second is, what can the government do for me? And this is where we get into the specifics of the various different stimulus packages that are available. There's some people that are going to be listening to this that have never been down to Centrelink or never been, the old phrase is on the dole. The government introduced a Job Seeker program, and when it was first introduced, there were queues outside Centrelink that went for hundreds and hundreds of metres. Now the government's saying, look, we want you to stay away from Centrelink. We want you to jump onto the MyGov website and register for the Job Seeker program. And that's a bit of a daunting task for a lot of people who have never experienced that before. And I can tell you, I can understand that. There's incentives available for business owners, where the main incentive or the big ticket item, if you like, is this JobKeeper program. It's been the headline act in the last few weeks from the Morrison government. It's really an incentive to enable employees to remain connected with their employers. And how that works is, in essence, the eligibility piece starts at the employer level. It starts at the business level. So the business needs to be eligible. And to be eligible, the government has said that your business has to be impacted significantly by COVID-19. And so their definition of significant is having a drop in income or a drop in revenue of 30% or more, or that you can foresee that happening in the coming months. If that's the case, you need to register with the tax office to say and register your interest for the JobKeeper program. And you can do that through your accountant, or you can do that yourself. But that then will enable you to participate in that program, where you'll receive a payment of $1,500 per fortnight or $750 a week that needs to be passed on to your eligible employees. There's a couple of other incentives that exist. I mentioned earlier about the traineeship or apprenticeship program, where the government will provide you up to 50% of your apprentices' wages for the first 9 months of the year, so from the 1st of January through to the 30th of September. There's a cash flow boost that talks about the government shouldering part of the load of the tax that you withheld on your employees, up to $50,000 this side of the financial year and another $50,000 on the next financial side of the financial year. And so it's about working out what's applicable to you. There's also some payroll tax initiatives that have been introduced by the State Revenue Office. Depending on the size of your business, you might get some money back from payroll tax. So it gives you the opportunity to really get some money into your business. And whether you're a household or whether you're a business owner, again, it comes back to the plan. If it's to be, it's up to me. It's about developing a plan for the next 6 months and then a plan post that 6 months post, once we come out of this corona world and go back to almost things as normal. And the final piece is this whole connectivity piece. And as I mentioned, we were losing our mind with the share market. We were losing our marbles when it was coming to toilet paper. But now there's this general feel amongst the community of acceptance. We are all getting better in the whole self-isolation piece. We're all getting better with our social distancing. And we're sort of all aware that this is what we need to do to ensure our country makes it through to the next level. But what I'm also seeing is I'm seeing this connectivity. I'm seeing people helping each other out. I'm seeing people share ideas. I'm seeing organisations like Noel Jones, leading the way. We're sending out information to their tenants and to their landlords and to their clients, trying to help. And everybody's trying to help each other out. And I think I learned early doors when I first went into business that the goal of a business owner, or goal for most of us, is to focus on who do you serve and how do you serve them. It's about the more you give to others, the more that will come to you in return. And I just challenge everybody to think about that and put someone else's health and well-being first, because it talks to karma. And I know firsthand that karma can be an amazing thing. It can also be a deadly thing. And I think if I could just finish up, Brett, by saying that, Abraham Lincoln once put it, he put it really well. The best way to predict your future is to create it. And so despite the fact that there's so much stuff going on that's outside of our control, we need to only focus on the things that we can control. It's our plan, it's how we behave and how we adapt to the challenges that we're currently faced with. Thanks, mate, and I think I might pass it on to Craig.
Thanks a lot for that, Jason, and thank you to everyone at Noel Jones Real Estate. It's a pleasure to be here to assist. Very anxious times for landlords, no doubt about that. Really uncertain what's going to happen with our income streams. If they're going to be there at all in the near future, if they're going to go down, and if they go down, by how much. There are a lot of things we can do, is the good news, when it comes to investment loans and reducing repayments. The first thing everyone seems to be defaulting to is loan deferments or repayment pauses. These are definite options right now, and to the bank's credit, they're handling it pretty well. There's long queues, but they're approving most applications. The problem with these is that you may be setting yourself up for future pain. And what I mean by that is that during the loan pause, you do not make repayments as such. However, the interest on the loan continues to capitalise. And when you reach the end of this 3 or 6 month period, what will happen is that interest will be added on top of the loan, the repayments will be reworked, and you're going to be making higher repayments. So in 6 months' time, it might be you're trying to get a new tenant, or you're trying to negotiate, and unfortunately rental incomes are reduced. At the same time, your repayments are going up quite substantially. An average size investment loan, you might pay another $3,000-4,000 in interest over the next year or two as a result of this pause. Now, it shouldn't affect your credit rating, which is something a lot of people are worried about. Most banks have come out and said they won't let it hit your credit rating, so that's a good thing. But the bad thing is that you might be deferring future pain. So what we suggest, if possible, let's look at your other options first. If there are no other options, let's defer the loan, no problem. So first things first, if you're paying principal and interest on your investment loan, let's get that down to interest only. That'll save you a huge amount of money, no doubt about it. The next thing we can do is we can obviously negotiate with your existing bank to try and reduce the rate. However, another point most people forget is that the majority of Australians with investment loans also have home loans. And 50% of people with home loans are at least 6 months in advance when it comes to redraw and when it comes to offset. So you're 6 months ahead of scheduled repayments. What this means is you've worked really hard. You've got these savings there. Feel free to use them, okay? It's unprecedented times. That's the only word we seem to hear at the moment in the media. So use those savings. give yourself a bit of a buffer, pay the next couple of months' repayments, and then if need be, we can defer. And last thing is, a big thing though at the moment is rates are historically low. There are some phenomenal offers right now for those of you who are able to restructure. So restructuring right now, for instance, for an investment loan, you can get interest-only loans, mid to high 2% range, which is unheard of, with offset accounts, potentially with rebates of anywhere between $2,500 and $4,000 from the new bank. We're seeing clients that are $7,000, $8,000 better off in the first year by restructuring. That's going to pay your next 3, 4, 5 months worth of loan repayments out of your own savings. So they're definitely the preferred options. However, it's case by case. Please feel free to reach out and we'll help in any way we can. So over to you, Daniel. Thanks a lot.
Thanks, Craig. Daniel DeCisi here from Noel Jones Real Estate. I just wanted to thank everybody for your time and just to ensure you that as a group, we've certainly implemented all of the relevant policies and procedures as recommended by the World Health Organization, both within our office and externally for client inspections and households. We want to ensure that, of course, we keep our staff, our community, our friends and family all safe during these uncertain times. For some of our commercial landlords, I will add that there's no doubt a number of questions that pertain to the new Code of Conduct that was released in the last 48 hours or so. I won't go into that 8-page summary right now, but I will assure you that we are completely abreast of that and welcome you to reach out and let one of the Noel Jones Group know if you have questions pertaining to that. And we're more than happy to sort of help you navigate through that. I also want to take this opportunity to outline that as much as we're property people, we are certainly here for the community. We're here to support you through these times. If there's something that we can do or a bit of uncertainty with respect to your own situation, we welcome you to contact any of the Noel Jones Group. I also want to thank, no doubt, Jason and Craig from the practice, running a great organisation that can also assist you with any of your financial needs. Thank you, have a great Easter and please stay safe.